Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, October 22nd, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. It appears as though we have gotten within about a point and a half of the previous quarter's high. That blue line right there is that high right here back in that looks like beginning of September. It is 49 half, so 45.49 half. Today's high is 45.48. So about 6 ticks off the high. You can see down here that came shy of the previous quarter's low. We were looking for price to drop a little bit lower into the previous quarter's low. A ton of bulls came in ahead of that, and we saw a higher low form and now a stretch to this level. But this has been the target ever since this day when price overtook the 44.21s. We mentioned before that's the midpoint of the previous month's range. It's the midpoint of the key range from the impulse sell-off last month. So by pushing through this level, it opened up that target. Now that we're here, we could push through a bit, but we could also fade right back and still be within the range, and perhaps even drop all the way back to the bottom and then do it again. So this is going to be a very important spot up here. I know I mentioned before that if we were to pull back, we could stretch into this target, but we've already gotten there for all intents and purposes. So again, we may push a bit through. How does the market respond to these prices here above the previous quarter's high and the key range high? If there is a failure to establish acceptance, there could be a rejection that leads to a quick return to the 44.21 midpoint. All right, let's take a look here at the NQ. You'll notice the NQ, all of these trading still in a narrow range for the most part. ES is at 45% of ADR, and the NQ is also at 45% of our ADR, 44.7. So that's the current range heading into the RTH Open. It is an inside day so far. Both edges are inside the previous day's extremes. And we have a narrow 4-day range that is developed as well. That narrow 4-day range, again, building some energy, but it's not really showing much in the way of direction. As a matter of fact, we did see a bit of a failure at the high yesterday. Right now it's kind of holding off the 450, 460 zone. So if it continues to stay below that zone, that could provide a little bit of a return back to the previous lows here, which is basically 15,300. Again, that's your 4-day range that's developing. At some point here, we may see a nice breakout from this range. Again, given directional conviction, that's your 3-day range that finished yesterday. This is your developing 4-day range right here, so 40% of ADR on a 4-day range basis. Again, when you have directional conviction, any downside break from a narrow range can oftentimes be the failure, followed by the actual true upside break. We're still stretching for the previous quarter's high here in the NQ. Again, right now it's range bound, so looking to fade the edges, avoid the chop, and stay directionally to the upside until proven otherwise. All right, taking a look now at crude oil. Crude oil had a strong low a couple of days ago, but could not hold the midpoint yesterday. We talked about that mid being very important, and if price could hold that zone, we may have an opportunity to push higher and continue to stretch toward those 86 to 87 target zone. Again, the idea here was that that midpoint needed to hold. If not, we would likely still be within the trading range, and we failed to see any kind of response at that mid. It initially held there, and then it tried and tried, and as soon as the stops came out, it was a furious decline. That decline came within 1 tick of the previous day's low. The previous day's low is also the 80.78 level, which is the key range 50% extension. So here's the key range high. When it broke higher, it came back, it held the high, went to 50%, stuck there, went away from it, came back to it, and is holding. Again, this pattern, this behavior, the ability to see the 8 period continue to be defensed. We mentioned any push below the 8 offers a trap opportunity. Today's low is precisely the 8, maybe a tick below it. But again, it continues to show strength out of that zone, and the idea is ultimately we are squeezing toward this high here of 86.03. At some point we'll get a breakout from this range. Perhaps it's sooner than later. But again, if we don't break out here today, perhaps we need some sort of failed low, which could give us a nice continuation into that upper target. All right, let's take a look now at gold. Gold here, seeing some strength today, seeing quite a bit of strength. It has definitely been lagging. Crypto by far outpacing gold here lately. Again, the lower highs have been clearly evident in gold, not just over the last few months, but you'll see over the last year plus. Lower highs intact. This market clearly right now failing to really get through the upper area here of 1840s, but that's been about as high as we can go. So on this move, we've talked if price can get through 1800, it opens up 1840, and perhaps we see the thing drop yet again. But every time we see a big high range day, you know, selling pressure typically follows right afterwards. So again, we'll see how this plays out, but not expecting this thing to really run away from anything. If we do get a little bit higher, perhaps we hit that 1840 target, but expecting a fade back down fairly soon. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.